we are live. Episode 1 of Labcast. I'm Enda from Ireland, 22.
And I'm Kishane from Jamaica, 27.
Alright, so this podcast, like the first episode, is gonna be a bit lighthearted. We're not gonna go too deep into any price related issues or anything like that because we don't want to bore the user for the listeners at the start. But starting next week, we will have guests on. We'll bring on some traders. The plan for the podcast going forward is going to be like some ICT traders, some supply and demand traders. We'll get on some retail traders, so there'll be technical aspects, and then we'll also try feature some fundamental traders, and then we'll just try to get on a few guests and talk about different matters in price action, and we'll talk about some psychology as well when it comes to trading. And so basically we'll start off and just talk about how we got started in trading and see exactly, and kind of give you an insight to how we got started. So you want to go first there?
All right, so for me, I've been trading for a little over 2 years now. I got started because some friends around me were trading and they were showing me that it can be used to make money. But really, what drew me to trading is how easy it seemed at the beginning. You just open your phone, you click buy, you click sell, and you make some money. So naturally, like everybody else, I was drawn to the idea that, if I could get this started and then make, let's say, at the time I was looking at $30 daily, because then that would be $1 million a year. So that was my initial thought process behind what was my trading goals. I wanted to go in, make $1 million, make $30 every day, and that would equal $1 million a year in my country, Jamaica. So I got started like everybody else, trend lines, found some consistency, found some small profits, and I thought that was it. But then when I was losing, I could never tell why I lost a trade. But whenever I won, it was just obvious that, hey, I won this trade because the supply zone or the demand zone or price bounce at the trend line. So quickly I started to realize that there's no consistency to my trading. I can't learn. I'm not learning. I'm only winning sometimes, losing sometimes, but I'm really not learning because I can't tell why I lost a trade. So I started searching for more stuff. And eventually a friend of mine told me about ICT, and I started watching the videos on YouTube and slowly got better. And here we are now.
Yeah, so we're going to have my story starts a bit differently than that anyway. So I started trading about 17 months ago, almost 2 years now, for a year and a half or so. It was February 2020. Started just before the pandemic hit, and I always had a keen interest in investments, but I never really knew where to get started. But the whole idea behind investing is you need to have good financial literacy. You need to kind of understand a lot about finance. That's my perspective of it anyway. I thought that, okay, it's only the bankers, it's only the people that go to college to study finance that will understand where to put their money and how to make that money work for them. But I soon learned that there was other ways, because at the time in Ireland there was a lot of trading companies starting up, like signal services, signal providers, and the people that were working for these companies were posting big profits on Instagram, and I was just scrolling through Instagram. I was working a full-time job. I was sitting there and I was kind of thinking to myself, like, okay, but these guys aren't working. Like, it'd be something I want to do. I want to get out of work. I want to be free. I want to have money to do what I want to do, and I want to set up my future and kind of get into it that way. So a friend of mine that was actually, I went to primary school in Ireland, so it's like the very start of school when you're like 4 or 5. I went to primary and secondary school with this guy, played some sports with him through the years. He texted me, I reached out to him and I said, okay, what's this thing you're doing, trading Forex? And he's explained it to me. And I said, oh, that sounds good. Yeah. So he says, okay. It was kind of like it was a broker situation, like a sign up with a broker. You get a CPA deal from the broker, kickbacks on any sign ups you get, and when the trader recommended two standard lots. So basically, I got started that way in about February with a company here based in Ireland, and I was following signals on that. I put up, I think the minimum deposit at the time was €450. So I put in €450 when I got started, and after I think it was 3 or 4 weeks, the traders that were sending the trades clearly didn't really know exactly what they were doing. So no need to kind of shame them or anything, but it was kind of like for the people that were in the company, it was kind of like a get rich quick scheme. They were making money, but they weren't actually trading, and they never understood truly the actual depths of trading. So I started getting interested that way. 2 or 3 weeks went by. I grew the account from €450 to about 1,500. I was using the signals from this company, and I was using signals from another company that I found on Telegram. This €1,500 lasted probably about 2 weeks after that before it was all gone. I kind of looked around. I was like, okay, I'm making good money now, so I decided to up the lot size. Time I really didn't understand trading, and then both signal companies had a very bad week. They lost every single trade that week, so all the money was gone. This kind of put it into perspective for me how trading can be something. It's like the money seemed to be quickly earned, but it also seemed to be quickly lost as well. The whole time I was doing this, I was still working, so I was kind of just entering signals when I was on my break, and I was entering signals when I was out working as well. But it was only in around July or August in 2020 when I joined a Telegram chat, and I seen everybody posting charts, and everyone seemed to be doing amazing. So I was like, geez, what are you guys doing? That's when I found ICT. I was introduced to the stock fund, break a market structure, and return to order block kind of style of trading. But it was kind of quickly lived where I started seeing good profits. I was like, okay, I'm finally consistent now. It was complete naivety. I wasn't very consistent at the time. I thought I was. So I went for an FTMO funding challenge. It was a $100,000 account. I actually passed the account and verification. I was delighted. I was like, oh, look at this. But it was a complete fluke. So like I had the $100,000 account here. So I started trading that. With my knowledge, I was trading trend lines and EMAs at the time. I studied the course Falcon, and then I went to the Gold Suite. I lost the account within 2 weeks. This kind of threw me off because I was like, okay, well, maybe I'm not where I wanted to be. I was kind of logging all my trades at the time into an Excel spreadsheet, and I expected that I was learning a lot more than I was. But when, like Tish said, I really didn't understand why I was losing. I could see when I won that trend lines were working, but then when the trend lines weren't working, I was like, okay, something's wrong here. I'm either, like, looking back on it now, I'd understand exactly where I was wrong. Like buying in a premium, selling in a discount. But this whole journey kind of took me to where I am now. I've been studying ICT, I've been in the mentorship since January, I've been studying his YouTube material since last August. I started to find good consistency in the past 4 or 5 months now. That's kind of where we are now.
Yeah, definitely a similar journey for me. When you just started out ICT concepts and you understand that it's really not trend lines that you should be looking at, but more of order blocks. And then you start backtesting, and then when you backtest and everything worked when you're backtesting, price respects order blocks, and you're like, this is the holy grail. I should be trading order blocks. And then you start realizing that, order blocks fail. And it's like you're stuck in a loop of finding a new idea, backtesting it and seeing profitability, and then just going into full life trading. Because I don't demo trade. I really don't like the idea of demo trading now, because I think that most traders fail because they fail to understand the emotional sides of trading. So luckily for me, I was exposed to a fundamental trader who really grind the idea of accepting that there are emotions. Don't try to ignore that they're there and pretend like I will never get greedy in a trade, but more knowing that I will get greedy in the trade, take something off or move my stop to protect myself. And I started getting comfortable holding trades and kind of just transitioning more into like a swing trader. But then I realized that that style of trading wasn't for me. The idea that I set my stop, I set my take profit, and just leave it all day. It's just on my mind. I'm wondering, how's the trade doing? Did it stop me out? Did it reach take profit? And that feeling I just didn't like. So I started to think that once I close that app, I don't want that trade on my mind at all. Whatever it does after I close the app, I don't care. So that's when I started getting into scalping, trying to trade for an hour a day, 2 hours a day, just one session, in and out, in and out, in and out. And after being exposed to ICT's mentorship, he talks about the whole compounding aspect and velocity. It really started to click that, yes, this is how I want to trade. So started sticking to scalping more, got comfortable with my strategy and started slowly increasing my lot size. And that's where we are now.
Yeah, I like when I was trading trend lines and I was using EMAs as well. I kind of like my win rate was probably like 30 to 40% on a good week, like max. But the RR was like 1 to 3, so it was kind of keeping me just below. Like I was profitable, but it wasn't very profitable. Like maybe like 1%, 2%, maybe 5% a month on a good month. So it was kind of the thing that I wasn't okay with that. Like I wasn't okay with being like, okay, my win rate is so low, but I need to have a good or to balance it out, like a risk to reward ratio. So I kind of found like when I found ICT, I was like, oh my god, this is the answer. Like this is the answer to everything I'm looking for. My win rate will improve because all I need to learn is why price will react at certain levels and exactly why. So I threw myself deep into ICT studying. I was like, oh, I really need to understand why this is happening rather than trying to like fight the balance between risk to reward ratio and win rate. So I was like, when I found ICT, I kind of threw myself into 5 or 6 different concepts. Like I was using OT at the start, which is a free YouTube concept that it's like the flagship concept of his YouTube channel. It's just like between a 62.8 and like a 78% retracement level using the Fibonacci. But it's still gonna when I started mentorship, I transitioned into some mentorship techniques of entering trades and also some other. I was using like my higher time frame would be like weekly, daily, 4 hour. Then I'd be like executing down lower like 1 hour, 15 minute, 30 minute. So recently enough now, I kind of swap between scalping and actually day trading to short term trading. And trying to like trade the OSOC, like the one shot, one kill. Try to like capture, say 60-70% of the weekly range. I find a lot more profitability in this. My main trading model now at the moment is kind of relying on inefficiencies in price and just retracements. So we have, we'll go into something now. Like, what was your worst trade ever?
Looking back in my career so far, my worst trade ever is I fell asleep trading gold one night. I had multiple positions, and like I entered, and then I was in drawdown. So I was just watching and waiting for it to. I had no stop loss, by the way. I had no stop loss at the time. So I was just watching and then waiting for the trade to move into profit, so I could adjust my stop loss and kind of like break even. So I was trading gold with multiple positions, no stop loss, and my plan was as soon as we run in profit, I'm gonna go break even and go to bed. But it was a long day.
Was it a small account or was it like just like what was it?
It was about $5 at the time because
Right.
this was one of those weeks where you deposit at the start of the week, and Monday and Tuesday and Wednesday were really good days. So I think I probably put like $100 in and just run it up to about 500, and then we're just chilling. And then this is going to be that mega trade of the week to take the account to 1,000. I don't know, there was just something about $1,000 balance that you always for starting.
Yeah, seeing those
Start
four
off,
digits.
yeah. If you start off with $10, your goal is I'm gonna take this to $1,000. If you start off with $100, $1,000 is the target. Something about $1,000.
Yeah.
So I projected a nice move, using my trend lines and stuff. And based on the calculations, if I had all 5 positions hit take profit, I was going to hit $1,000. So I was really, really liking that idea. Plus, gold moves a lot. So full confidence. So no stop loss. Didn't even think that I could lose because I was buying off a trend line. And I fell asleep. I woke up early the next morning, and when I woke up, first thing is to check the phone. I know when I opened the phone, open MT4, like I woke up just in time to see all my margin in red and the trades just disappearing one by one, and I was like, what? My day just started horrible.
Yeah. See, like that actually puts you in a bad mood then as well for the rest of the day, especially like because you did something wrong and then you're kind of angry at yourself for doing it. You know what I mean?
Yeah. You know what I'm saying? They say hindsight is 100% correct. So looking back, you started saying, why didn't you use a stop loss? Why did you do so many positions? You started seeing everything.
Yeah, like you find all the reasons to hate yourself after the fact.
Definitely.
Yeah, so I find that's kind of the thing about trading. Like you make a mistake, but you kind of know at the time you're making a mistake, but you're kind of just like when you're starting out, it's like the chance of being right that kind of fuels you to be greedy.
Yeah. Ever since I started journaling, I journal my wins, journal my losses, and then I'll review like at the end of the week, or if I'm nostalgic, I'll review journals from last year.
Yeah.
And one consistency that I saw with my trading was I had no rules, and most of my positions before ICT, I was hoping. My strategy was just hoping. It was get in here and then hope it moves. And then I started to try to trace back, where did this idea start? This idea that the most important thing in the market was entries and not direction.
Yeah.
And then ultimately, it started by seeing a lot of traders on social media posting their sniper entries and all of that. So, that's what I wanted. I wanted to have sniper entries and then the market just move. But you started to realize that sometimes you take a buy trade and then the market just sells off. And then your buy entry would have been a perfect sell entry. And
it's a reverse sniper.
Yeah, you're the wrong kind of sniper right there. So, I started developing this desire to find out where the market is going to move to next and where it's going to turn around. So then ICT kind of filled and answered that question for me. By identifying the draw on liquidity, your life becomes so much easier.
Yeah. I think the draw is a very, very important concept for people to understand. Like I was saying, the major things before you add rules to your trading plan is you need to know where price came from, where it's going to go next, and where it's likely to retrace it to fill in some inefficiencies. And with those 3 things, as long as you have a set of rules and a good entry plan, and then you just manage your risk correctly, like that's just ideal. And it's all about just consistently sticking to that rule base. Like at the end of the day, it's all about sticking to rules, creating a rule based model where you're like, I need 6 things to happen before I take this trade, and then if you constantly stick to that, even sometimes you'll be wrong something, and sometimes like hopefully more than not you'll be right, and that's kind of what drives consistency.
Definitely. One thing I'd add to that list of things that you definitely need to have in your trade plan. Most people focus on risk management and think it's the holy grail, and it really isn't.
Yeah,
Risk management should account for like the least part of your trading plan. So
explain that a bit more. I'm not sure.
yeah, definitely.
I think risk management is very important.
So whenever I'm going to trade, naturally the most important thing is the draw on liquidity and where the market is heading. Based on where the market is heading, what's my plan? Am I going to be waiting for it to get to its target and trade a retracement or a reversal? Or am I anticipating a retracement to happen and look for continuation patterns? But everybody can do that when you analyze a chart. You can look at a chart and say, these are relatively equal highs. This is where the market is going. And you post the chart and then it gets there. And then you say, okay, yeah, it got there. Cool. But how many persons can identify where the market is going to go to and then trade it while it's going there? That's the hard part. What's even harder is framing the risk is easy because most persons are entering on an order block and your stops are below. What gets a lot of persons is the idea that because this is where the market is likely drawn to, once I enter, it's just going to go there now. So your risk is managed, you know where your targets are, but you cannot manage an open trade. The market, so let's say you have a 100 pip target and the market trades to 85 pips off that 100 pip target. Most persons, again, they start hoping, okay, it's so close to 85 now. Maybe I'm going to break even, or I'm just going to wait for it to take profit and then that's it for the day. Things like that. Or the market trades to 85 pips and you're watching it trade, then it drops back down to 50 pips. And then you start talking to yourself, should I close the trade at 85? What if it stops me out? What if it stops me out? No. And, all that emotion start creeping in and you just lose yourself because you're not managing the trade properly. And then you waste all that mental capital trying to move the market with your mind. So while risk management and all that is good, and I definitely recommend risk management and a trade plan, money management, trade management is way more important. Because what if you analyze that 100 pip move and then it goes to 90 pips and you're just watching and hoping for it to go to 100, then it retraces all the way back and stops you out. You just lost 90 pips. You didn't make 90 pips. Doesn't matter what your stop loss is, even if you don't lose that trade, you still just lost 90 pips. So managing the position from entry to exit is very, very important.
Yeah, I understand what you mean now. It's always like, yeah. So trade management is very, very important. Like paying yourself, like there was a good analogy. I can't really remember who said it now, but it was somebody we know, and they said that a leaking tap will always fill a bucket, and that was kind of something that stuck with me. Like you'll never go broke paying yourself.
Definitely.
So if you have 75 pips framed and you take half the trade off at 50 pips and go to break even, and even if it stops you, you still made half of the trade or 3/4 of the trade.
Definitely. That's one of the best feelings.
Yeah, banking pips, and then you can just close your MP4 or close your trading platforms and walk away and be happy. And you come back later, you could have a stop, you could have a break even, or you could have a take profit, and there's no emotions attached to it, and you've already paid yourself.
Yeah, that's peace of mind in trading, and that's one of the most important things if you plan to stay long term.
Yeah, that's kind of something I've been doing in the past few weeks now. So like, I take a trade on gold, I'll go in 1 to 2% risk. This is like a small enough account anyway, so I like 1 to 2% risk, and then I'll take profits at 20 pips regardless where it's gonna go. So I'll take say 70% off, and then I'll just say, okay, I paid myself now. Leave a runner. If it hits take profit, I don't mind. If it hits break even, I don't care.
Definitely.
And the thing, especially about gold, so when I'm scalping gold, like it could be 10 minutes, if not less, to get 20 pips. And the next thing you know, you take your money and then you just, okay, I'm happy now. And then that's it.
life's so much easier on you.
Yeah, because the most important part in trading is keeping the mental capital. Because like it's a lot. If you run out of mental capital, like to explain it in a better term, if you get run down or you feel anxious when you're trading, like scared money doesn't make money in that kind of sense. Like you can't be effectively following a plan if you're worried about losing. Like you need to kind of when you sit down and open up your trading view or your whatever platform you use to analyze the markets, you need to sit down with an objective goal. Of, okay, how many pips am I looking for? It's kind of like one thing I've been saying to people that ask me for advice to say, okay, I need 50 to 75 pips per week. How many trades according to my plan am I going to need to get there to this weekly target? And then you say, okay, how many? Maybe it's one trade, maybe it's two trades, maybe you capture the weekly range and you get your 75 pips. It's all about the less is more. So like if you're spending more time on the charts, the more likely you are to make mistakes because you're just struggling. You're like, okay, I'm anxious now because I'm after, I'm almost at the target, but will I take this extra trade just to bring up the pip count? And then next thing you bring yourself backwards. You have to losing some pips, and then you're going to get back into the market and overtrade and try to get up what you've lost already. So I think it's good to say at the start of the week, okay, this is what I'm looking for this week. Here's the draw on liquidity for the week. I want price to trade to this level. Here, if it retraces back to here, I'm going to have an entry here, and then this has to follow my trade plan. Then you just set the limit and wait. Or else if you're a scalper, you're just like, okay, I want 25 tips today. You'll just sit down and try to find a trade that will take you 25 tips, and then you close it on the trading platform after that and just walk away.
Peace of mind, that peace of mind. So, what about you? What's your worst trade so far?
So I think I have two answers to this. So I have a bad trade that impacted me negatively, and then a bad trade that could have been a lot better than it was at the time. So like I'll get more into that in a second. So basically, the worst trade I've had was obviously when I was starting out. I had that account that I grew to 1,500. At this time I didn't know what I was doing. The risk management was out the window, trade management out the window. Also, I think it was six signals in the space of like an hour, and I entered them all at the same time, and I was like 0.07 to 0.12 on each trade, and the stop losses were huge. They were like 50, 60 pips, and I could just remember sitting there. I didn't know why price was doing what it was doing. I knew nothing basically. I knew how to calculate lot sizes using a calculator, and that was about it. So that's all I did. I was risking like 4 to 5% per trade on account, and I entered like 7 or 8 positions. And then as they were going to draw down, I was like, okay, if I just enter again, maybe it'll come back and maybe it'll double the profits then. That kind of. As I went further and further to draw down, I kind of just sitting there staring at my phone, panicking, and I was like, oh, what am I have to do? I'm gonna lose everything, and I started panicking and panicking and panicking. The trades came to like 2 or 3 pips before stop loss, and I was like, I can't handle this like emotional pain anymore. So I closed out the trades. But it was the funny thing is like I look back at it later on, and they never actually hit the stop loss. If I would have just left them there, they turned around and they eventually went back into profit. So I was torn then. I was kind of giving out to myself like, why you have to do on this? If you would have just forgot about it, if you wouldn't have been looking at your phone, and then I was like, you go spiral out of control. Then it's like deep into emotions, kind of arguing with yourself mentally, like in your head. You're like, why was I doing this? Why didn't I do this better? Why I could have managed my risk better? It's stuff like, but my trading was at its infancy. Like I was only starting. I really didn't have a clue how to analyze the markets. I had never opened a chart on TradingView before. It's just pure signals. The trade that didn't, this trade hit take profit, but I was very angry with it because I just this was when I was trading EMAs and trend lines. It was in March 2020. As we all know, the market took a big nosedive as COVID kind of kicked off in the world. It started spreading around the confidence of like this was like a kind of fundamental thing rather than technical. So the trade plan was I had a 7 EMA and I think it was a 25 EMA. And when they crossed at a level of support or resistance, I was anticipating a turn in the market. So I seen it, I was trading GBP, JPY. I took a sell position, and my take profit was 60 pips. My stop loss was 10 pips. I went to sleep. Okay, I woke up. I was like, okay, I've hit take profit. 2 days go by. I look back at the chart again, and it dropped over 3,000 pips in profit. So I just kind of sat there and I was like, oh my God, I would have just left the trade to run. But like, then again, like, I'm looking back at it now in hindsight, I'm like, I never would have anticipated a 3,000 pip drop on any pair. Or not. I think it was,
Yeah.
what, 3,000 or 1,500. It was crazy. Like, so I expected, I got my 60 pips and I was out, but that was like, that's a trade I look back at now and I'm like, wow, like, that really, it could have been something great if I would have understood a lot more about the market. But then at the time, nobody anticipated that much of a move. So I was kind of happy with the 60 pips and I got out. And that was it.
Yeah, I can relate to that. I can definitely relate to that. Like, I explicitly remember this day I was selling USD CAD, and I don't know what was happening. I don't remember what was happening, but USD CAD was just dying, like dying all day. I think it moved. Well, I remember getting about 100 pips, and I didn't enter at the high of the day. So I was like, wow. And then I closed it, and then for the rest of the week, it just kept dying. You know, that's when the idea of swing trading started to like pull up my shirt to try out swing trading, because I realized that you could really make a whole lot more on this, but then it doesn't suit me personally. I'm going to be uncomfortable holding that trade that long. So in my development, I'm nowhere there.
Yeah, that's kind of the thing. It's like when you're finding the trading style that suits you best. Like I'm very impatient as a person. I learned this through trading. I didn't realize that I was very patient until I came to a point where I was trying to decide on what style of trading I wanted. That's why I'm that's why I'm a scalper to a short term to day trader, like max 2 or 3 days holding the trade. Because other than that, like I don't know, I can't bear to stay in profit and leave that much profit on the table where I'm not actually like securing some profits and like paying myself. So even OSOC, like I catch high of the week, I'll ride it out to 60 pips or 50 pips and I'll close half the position. I'll say, okay, I'll leave the rest to take profit. If it reverses, I don't care. I paid myself. So like I was like, I never really looked into swing trading as a thing. I was like, okay, swing trading isn't for me. I see people with 100 pips stop loss trying to ride out 400 pips. Like that was my perspective at the time. I was like, I just don't understand why you would wait 3 or 4 weeks to make a 1 to 4 when you can do it with a 10 pip stop and catch 40 pips. So like on a short term basis, you're trying to catch 40 pips. It seems a lot easier than 400 pips. So like swing trading never appealed to me. So I was like, why do something in 3 months when you can do it in a week?
Definitely,
So that's kind of the thing that led me into the thing. And then obviously when I started the mentorship, ICT portrays a short term trading point. That's his model. Like he trades like intraday short term bias. Like he tries to capture the weekly range. So when he's explaining things in videos on YouTube, I was looking at it and he's kind of, he's trading on a 1 hour, he's trading on a 15 minutes. So that's kind of like where I kind of started. I was like, okay, not that I want to copy him, but I think that trade plan and that trade, like the kind of duration of trades will suit me best.
Definitely. So you're predominantly a short-term trader.
Yeah. And then I got into this thing of the high risk to reward. Like I traded loads of different styles. I traded Wyckoff for a while. I traded supply and demand, but I wasn't really trading supply and demand. Like I didn't understand the concepts and they never really made much sense to me. So, but I was trading ICT at the start and I was trading a 1 minute chart with 1 minute, 2 minute or 3 minute chart. Just kind of odd time frames for people who are always asking me questions like, well, why are you using a 2 minute chart? I was like, that's just fun. You know what I mean? But I was trading what I know now is a scalp entry into a short-term position. So I'd be taking like a position with a 1 or 2 pip stop loss. I'd be risking 0.25%, and I was going for this 25 risk to reward ratio or 50 risk to reward ratio. Just like you see it on Instagram, it looks cool. You want to kind of appeal to people by doing that, but in the long term, like I realized my win rate was probably 30-40% max on a good week. Probably less if you took the average over a month. And I wasn't really that like I was profitable, but like just about like probably 1%, 2% maybe a week if I was lucky. But that was kind of like it was just kind of a status thing at the time. Everybody was trading, like everyone. I looked around in all these group chats and like everybody was trading high risk rewards, and everyone was catching sniper entries and writing out 30 pips to catch 40 risk rewards. Looking back now, like it seems stupid in relation to my model at the moment. Is working a lot better than that. So when I kind of widened my stop and took a more easy approach to it, like a real like the mental capital side of things. Now I feel a lot better with trading because I'm like, okay, I don't have to worry about staring at my phone until it goes to 10 pips profit and then moving break even. Like it's in the long term. It's all about decreasing the stress levels on yourself and trying to like bring down the amount of times you spend staring at a chart. Because it's really not good for your mental capital. Like you're just gonna spend all day staring at the chart, watching the candles paint.
Yeah. I don't personally, well, I don't do that anymore. If I'm studying, then I'll watch candles paint just to see like concepts and ideas play out in real time and journal that. But babysitting a trade, that feeling, I feel like that drains your mental capital more than losing.
Oh, definitely.
Because you react emotionally to every candle that goes against you. Yeah, even if it's just right back at your entry, like you're just watching and like waiting for it to move away, just trying to move it with your mind. So I guess once you accept the risk based on your trading style, you should know how long your trades generally take to pan out. So if you're a 5-minute scalper and you know that let's say like 5-minute candles and then your take profit is usually it, or after 5 candles you start usually moving your stops and break even, then if you enter now, you don't check the trade until 25 minutes.
Yeah, so like that's kind of something we've gotten into recently as well. It's like time and price is very important, but like the time aspect of how long your trade like ideas usually take to pan out. This is something everyone should record, I think. Like you take a trade, okay, I entered the trade at 10:42 a.m. And 10:56 a.m. it hit take profit, or 10:55 it hit stop loss. So you should kind of have a rough idea of how long it takes to go either direction according to your trading plan. And then like there's obviously some exceptions, but like for the most part, if your trade plan is identical, every single trade you take should have a certain amount of time it takes to move away and start going towards your take profit. And like we said, the only way to kind of understand this is watch the price print when you're not in the trade, reading the tape as we call it.
Definitely. All right, so we both talked about our worst trades in our careers so far. What's your best trade been like?
I've had a few now. So I've actually have another worst trade, which wasn't a very good trade. That was like a high RR time. I was trading a $100,000 account for FTMO. I was trading high RR. It scaled in 3 positions on Euro USD, so I had about 40 or 50 lots running. The trade was running, I think it was 26,000 profit, like 26%, which was insane. It was 3 positions, 1% risk each, but I had only 1% risk exposure. I went to sleep and I woke up and I had minus 1%. So I didn't take any partials, and I was just ruined. But so moving on to like kind of the best trade I've taken, I think every week I kind of update this like I get a good trade, and then I'm like, okay, I'm happy with that, and then like the next week after. But there was definitely a trade back. I think it was like one of them was a high RR trade. I was just very proud of it. It was a 1 to 65 on GBP odd. It was like I caught the high of the week and just rolled the thing out with a 2 pip stop loss and dropped. Like basically,
Nice.
you know, it was crazy. Like I remember posting it into my chat. I posted it into a channel on Telegram full of traders, and I got about 50, 60 messages asking for signal. And I was just like sitting there, like, if I could replicate this every day, it would be good, but it's definitely not possible. You know? But probably one of the best, like some of the best trades I've taken are definitely when I've just stuck to my plan and like completely follow the plan. And it's not about the monetary gain or the percentage gain. I think it's kind of the satisfaction you have knowing you're right following your plan.
Yeah, definitely. So, you know, I share that sentiment, that your best, well, I classify my best trades in really two real categories. I consider it a really good trade if I enter at the right time and then the market just moves. It doesn't stall. So let's say I enter at 8 o'clock and it just moves from 8 o'clock and it never comes back to that price. I like those trades. And all the trades I like are the trades that we use, you know, art to get the high or the low of the day. When you project where the high or the low should form, and then you set a limit at that price and then just tags it and then leaves and it never trades back.
Like that Euro USD high of the week we got there, like I think it was last week, or it was high of the day. It was like midweek Wednesday, high of the day. We thought it was going to be high of the week. I mean, it's hard to predict it. And then when it hit, it just ran straight from there. Just died, took a nosedive after it.
That was the day when we were all on it.
Yeah. So I remember like posting it into the Nut Lab, and I posted a screenshot, and I got like 12 screenshots back at the exact same entry, like clearly tip out. No, that's a good one.
So with those classifications, with those classifications, you know, I also update my best trades week over week.
Yeah. Definitely. Like I remember posting we caught the high of the day, and I posted Euro USD high of the day, and I think I had like a lot of people saying no, it's not, it's gonna run higher to this price, or it's gonna run higher, and then it just tanked, and everyone was like, how would you even predict that? We're like, nah, you know, can't really explain how we predicted it now, but I was like, it's not my place to speak on, so I just said I'll update people like that. It's funny.
We have a whole lot more crazy trades to share for the person that are following us, so they'll see.
Yeah, exactly.
We'll eventually bring on somebody who is algorithmic precision in the flesh.
Yeah, there's a lot of people like that now growing. I've noticed. So there's people we know well, and they're like, the future guests would be good to see, because I want to kind of get an aspect on every different style of trading and every different type. So we're like, I don't want to just be boring the audience with a load of ICT traders who all trade the same concepts and everyone trades the same kind of ideas and strategies and like the same view on the markets. Because like at the end of the day, of course we believe as ICT traders that it's the end all be all, or the be all end all of trading. Like it's how it should be done. It's algorithmic precision. But there are people out there that just stick to their plan. They're profitable using trend lines. People are profitable using head and shoulder patterns, you know, EMAs, you know, reverse bullish M's or bullish W's, and you know, bearish M's. And, like I think it's very interesting to get a different insight. Like some people use trend lines, some people use supply and demand, some people use Wyckoff. But like they could all be the exact same amount of profitability between them. They could all have the same results every month in, month out, regardless of the trading style. Which I think is it's kind of like unique. It's what makes us all unique. It's what makes us have our own like signature on the charts, basically.
Yeah, for real. Because I mean, I personally know persons who they don't trade ICD, they only know of ICT since I started trading ICT, and these persons are insanely profitable and they're fundamental traders.
Yeah. So like that was kind of the thing as well. Like I think it's funny, even in a group full of ICT traders, I've seen there was this one day and everybody had the same trade. Every single chart that was sent into the group had a different execution on the chart. So like some person used optimal trade entry. Some people took a sell off a breaker. Some people used an order block on like a higher time frame. Some people had a different style of entry, but everybody had the same entry and the same take profit, which I thought was kind of interesting. So it's like your chart represents you as like not you as a person, but it represents your style of thinking and how, like you kind of learn a lot about what a person sees from looking at their charts.
For real. And I mean, I think that's one of the reasons why I consider NotLab as the best trading group. But I mean, everybody's going to say that about their trading group. But for me,
exactly.
we all learn from the same person, but we all interpret price differently, and we arrive at the same solutions. So you can always learn from each other and improve, and that atmosphere I just love.
Yeah, that's what I mean. And like everybody thinks that the group is just like strict traders, and everyone's just nearly sitting there all day selling charts. But like on the flip,
No.
the actual, in the reality of it, it's a lot more lighthearted than that. Like there's people, we have traders from everywhere. There's like I think there's two guys from Jamaica. There's three Irish guys. There's two, I think one or two South Africans. We have
Three
some Germans.
Germans.
Yeah, there's a guy who lives in Cyprus. We have, you know,
Someone from Curacao.
Yeah, two of them living in the Netherlands now as well. Big shout out to the boys in the lab. So like it's kind of like it's a light-hearted group. Everyone has a bit of a laugh, but then during trading hours, during London, during New York, it's mainly trading because no one's talking about anything else. But like you'll have the weekends and everyone's sending pictures of what they're doing, their hobbies. You know, people are going to the gym, people are driving their cars, people are going to parties. You know, everything's different. Everything's different, and we all have a laugh at the end of the day.
Definitely.
But it's definitely something like I think like my trading anyway personally has excelled at a good level since I joined because it's a good environment to surround yourself with like-minded people that actually kind of think and interpret pricing in like a similar enough fashion. And everyone's progressing at their own level. Everybody's ready to take on funding challenges. Everyone's tackling their own means of trading, and some people trade their own capital. Some people trade funded accounts. Some people have investors. So it's not like there's no similar situation. Like no one's really in the exact same position as each other, but everyone's still working it out. Like everyone's on their way.
That's teamwork.
But like at the end, like it's teamwork. Trading is a personal thing, but at the same time, we're not sitting there going, okay, I'm entering this now. What about you? It's like people
Yeah,
sending a chart. Like sometimes two people oppose each other. Like I'm going short and you're going long, and then we're like, who's gonna win? It's like that kind of friendly, competitive. So I think it's like a friendly competition. It's just fun to kind of have a laugh about it, and then we'll see who's right, and then the person who's right will teach the person who's wrong what they've seen, and then vice versa. So it's a good way to excel with people that you know and friends that met through trading, and it's just interesting.
It's funny that you said that because I remember one day I think you were going long gold and I was short for a scalp, and everybody was wondering who was going to win because we're usually insane execution and we're usually on the same side.
Yeah,
I got my scalp, you got your buy, we both won, and it was a good day.
Yeah. That's what I was just about to say as well. It's usually like that. It's like two people be going long, but like your take profit would be above my stop loss, and then it would swing at the point of your take profit. Like your take profit would be hit, and it would swing in my favor then. So it's kind of funny, like that's how opposing trading styles and two different people can see the same thing, but you're taking one side of the trade, I'm taking the other. Like it was like last week we all caught the O shock and you're all the short position from the efficiency after FOMC. And then we all sent in the same chart, and then after one person sent in the long position from the bottom up. So like we got the whole weekly range up and down between both of us.
Up and
Even though it
down.
wasn't
I remember that.
everybody yeah, so what else do
So
we kind of dive into for the first one?
I think we covered a lot in this first one. Definitely, there are a lot of stuff that we will be covering going forward. So
Yeah. So like this was fairly light-hearted. Wasn't very structured. We didn't really have too much to speak on. It was just kind of giving people an introduction to who we are and like how we found trading, what we're trading, and our kind of style going forward. And the plan for this podcast is just to kind of give people an insight into how every person can see the market in a different way, but everybody can succeed. And I truly believe that it's not about you have to be specifically gifted to trade. You just need to put the time in and the effort, and it'll all pay off. You just need to understand. Like I spoke to a guy yesterday, so just to trail off here for a second. I spoke to a guy yesterday, and I told him focus on one thing in price action that you can see occurring on a regular basis. I said it's funny to bring in a pun that I heard. It's like a expression, it's like a jack of all trades and a master of none. I say you don't need to know every aspect of price. Only focus as long as you know one. You pick one setup and understand the context that arises to give that setup validity. And then after that, it's just a matter of repetition. You just keep doing it, keep doing it, keep doing it until let the compounding and the velocity do the heavy lifting for you.
indeed.
So that's about it. We haven't decided who a guest is next week. We'll be posting this on Spotify tonight, hopefully. If I can get that sorted out in the next few minutes, and also we'll probably post this into our Telegram chats as well. I got a little MP4 or an MP3 version, so we don't have to have the pictures anyway. So I'll just have the sound. We'll get it uploaded to Telegram chats as well, and see. We'll see. We'll put in a poll or something. We'll get a few guests and we'll put in the poll into our chats and see who you want to see next week. I think that kind of seems like the best way to do it.
Yeah, so we can appeal to what persons actually want to hear and not just share our opinions.
Yeah. But like we definitely will be introducing a lot of the Nut Lab members on here over the next few weeks, just to kind of give people an insight into like how different we all are, but how we're all seeing things similar enough, and how we actually came together as a group.
So we'll definitely be doing that, so guys can look out for that.
I think that about basically wraps it up for now.
That should definitely be it.
Yeah, so thanks again, everybody, for listening. This is the episode 1 of the Labcast podcast. We'll continue on doing one a week with different guests from now on. We're just going to co-host it together. So thanks everyone for listening, and that is it.